Last week, we saw heavy selling in the US indices, and the question is there more downside to come, or is this just another in the midst of many buy the dip opportunities to load the boat on things like the Dow Jones, the NASDAQ, the S&P 500, which, by the way, are pretty close to their all-time trading highs. Take a look specifically at the S&P 500, and you're talking about just about a 3% move to regain the title of all-time trading highs on the index. So as we go into this week's video, we're going to be discussing gold, silver, oil, indices, the dollar, currencies, and much, much more. All I ask is that if you enjoy my videos, let me know that you want to see more of this type of content by hitting the thumbs up button and subscribing to the channel down below. We're just about to hit 500,000 subscribers, so thank you very much for all of your support. I really appreciate it. So I wanted to start with the state of the indices, just as a risk on versus risk off kind of gauge. Let's talk about the hourly chart and how we ended out last week. So what we saw here was we saw on Friday morning, or I guess it was Thursday evening into Friday, we saw the announcements, the kind of news headlines hitting the wire of the stuff going on in the Middle East, right? Which causes, of course, a lot of tension, and markets really don't like that uncertainty. However, I do not mean to in any way sound insensitive to what is a serious and concerning matter that's happening there, but at least from a market's perspective, in recent times, for the last multiple years, most of the time when you get these geopolitical headlines of some sort of violence happening in a place, while it does cause the market to initially react, 9 times out of 10, it has been a pretty good buying opportunity. And I do think that there is a possibility that this could just be kind of an opportunity to pick up shares in stocks or to take a look at the indices from the long side. Now, like I said, those things are real and those conflicts are serious. It has nothing to do with my, feelings on those matters. But from an index perspective, generally speaking, those are some opportunities where most of the time the market freaks out first and then kind of realizes it's not as bad. But of course, this time could be different, right? There's always that possibility. And if so, if there's some sort of bigger stewing, World War III type event, then yes, that would cause much more downside for the indices. However, I personally don't think that that is incredibly likely. And so for me personally, it does not disturb kind of my overall bias of bullishness on the indices. I also wanted to talk in terms of indices about what we saw in the Commitment of Traders report this week. So what we've got here, of course, from a overall positioning, we have, a good bit of net positioning here that we can look at, like gold, silver, the Japanese yen, these being some of our most proportionally long by institutional assets. And then we have things on the other end, right? The Canadian dollar, the Australian dollar, the Swiss franc, the New Zealand dollar, and treasuries. These are some of the more shorted or sold things from institutions. However, this net positioning tool is mostly useful for longer term traders or investors. What I like to look at from a trading perspective is actually this weekly table, which shows us the latest buys and sells. So let's just run through this really quickly and take a look at what institutionals were accumulating and selling in this previous week's report. The Swiss franc was a big winner here, and these, of course, were going off of the change in long contracts week to week. The British pound also saw heavy buying, closing of shorts. Platinum, oil, silver, and oil I find, of course, not too coincidental, considering maybe somebody knew something, because there was a huge decrease in short positions and an increase in long positions. Silver, there was also some accumulation from institutions, the Canadian dollar, the euro, the US dollar, the New Zealand dollar, and they bought the NASDAQ. On the flip side, if we take a look at some of the things that they sort of did some net selling, I would say gold is pretty neutral. You can see they decreased positioning in both. But specifically in terms of things that were more heavily sold, we have things like the Japanese yen, which had a decrease in longs, increase in shorts, the Australian dollar, the Dow Jones. This one's pretty mixed, though. You can see they added some longs, but added more shorts. S&P 500, they added significant shorts, decreased significant longs. So this was a bearish report for the S&P 500. Also for the Russell, they decreased longs, increased shorts, and the Japanese stock market, they slightly decreased longs, increased shorts. So there's your COT data, or the Commitment of Traders report data, which is visualized in our software, the Edge Finder. If you'd like to explore the Edge Finder and all of its features, check the link in the description down below to apply for a trial. So here's the thing with the S&P 500. Does this dramatically change my perspective? Well, yes and no. The commitment of traders data for the NASDAQ specifically looks really interesting. We did have some actually buying going on with the NASDAQ specifically, but then we want to take a look at, of course, the way we do on this channel every single time we talk about, indices or commodities or whatever, we always want to take a look at the full conclusive view. And I did not mean to hit that, so let's just go back. So when we're taking a look at the full conclusive view, we take a look at the NASDAQ, for example, we are getting a very bullish reading. That takes into account things like economic data, technicals, and sentiment. And for diehard Edgefinder users out there, we are adding the producer price index and PCE numbers to have their own scoring calculations added into the overall scoring. I'm really excited about this. And if you're a nerd like me about the Edgefinder and how it functions, that new addition is a nice addition to the economic data section, adding more context to the inflation reports, which of course heavily impact things like the NASDAQ, the Russell, the S&P, etc. So Russell and S&P, I do have a long position currently on the Russell, but we did see some COT selling on those as well as the S&P 500. So still sitting in bullish camp because most of our economic data does suggest some favoritism towards stocks. We had some cool inflation prints, which we covered in this past week's videos. We did have a CPI report. And let's just take a look at context here where we're at with CPI, right? CPI continues to trend lower. We're getting closer to that target rate. 2.4% was what we saw last week. And so we're on our way, still kind of grinding our way down towards that Fed 2% target, at which point the Fed seems very keen on cutting interest rates. Cutting interest rates is, of course, stimulative to businesses, and so stocks, I think, can continue to push higher. So that, alongside some more clarity with the China and U.S. trade relations, plus EU seems to be kind of coming next, it does seem likely that, in my opinion, the path of least resistance for markets is to continue to move higher, and I'll be looking for breakouts and retests or pullbacks into further support levels to look for long setups. Now, I want to go back to our top setups algorithm because I'd like to also look at Bitcoin in reference to this. Bitcoin is also getting a bullish rating on the Edgefinder, and so when we take a look at Bitcoin, which is trading at the time of me recording this, I'm recording this over the weekend, obviously, so what you can see here is Bitcoin is hovering around those all-time highs. I'd be interested on Bitcoin specifically in getting a long setup from a trading perspective on this kind of move or a deeper retracement into this area, depending on what my current positioning looks like in my portfolio. If I have a whole bunch of stuff already on the long side, which I do have Russell and stocks, on the long side, so I'm kind of loaded right now. But if anything changes, I will be keeping an eye on Bitcoin to potentially add some longs on that side of things. Let's continue on and take a look at gold here. So gold raced to those all-time highs on all of this geopolitical uncertainty that we did get in the recent coverage that we've seen. And so when we take a look at gold, I'd love to just take a quick look in terms of the state of the gold chart here. Where is gold? Gold is getting a neutral on the Edgefinder. We did get some COT buying, which was interesting, or the COT net positioning here. We just got done discussing that, right? You had your COT still strong for gold here. So I do like the idea potentially of being long gold, but specifically what I'd be looking for on a technical basis would be a breakout here and a pullback into this support level around the current levels, this 3,400 area, or a retest of the 3,300 along this trend line, or a deeper retracement into 3,100. At these points, these would all be scenarios in which I'd be predominantly looking for long side continuations on gold. I do think the path of least resistance for gold in 2025 is to continue its initial kind of move higher. If you've been watching the channel, then you know I caught this move here. It was my best trade of the year. This move, I pretty much caught almost all of it. I trailed my stop loss, ended up taking it long from around this area here, ended up closing out right around here. So I caught a good chunk of this move. I'd like to see if I can catch another wave higher on gold, but we'll also be watching the economic data very closely to see if that makes sense in the context of my strategy. So, when I talk my strategy, I'm taking a look at economic data pretty heavily. And so when we just take a quick look at the economic heat map for a second, I wanted to show you where we're at with this, because when we take a look at our USD impact, what you can see here is that the USD impact is actually getting a 50% score. What that means is that half of our stuff approximately is either bullish or bearish, and then we're getting some neutrals in between. So the producer price index came in as expected. The consumer price index was cooler than expected, so that was bearish for the US dollar, bullish for stocks, neutral on the PPI year over year. PCE was also neutral, so we're getting some neutrality on the inflation statistics. And remember, this is all going based off of actual data versus forecasted data. So that markets trade heavily on expectations versus whether those expectations are hit or missed. And so for the most part, PMIs were weak though. So this was soft for the dollar, soft for stocks. So the bearish bias that I've had in the dollar recently has kind of dwindled into just a neutral spot on the dollar, at least at this time. So I am watching gold here. I'd like to keep an eye on the economic data. If you get some cooling in some of these reports, that of course could change the system, change my scoring a little bit further. But if I take a look at our economic surprise meter, so for currencies, I do watch this pretty close. This is a bit of a kind of cheat code tool for my system. I'm looking at things that have strong readings, which all a strong reading means, by the way, is it just means that compared to expected values, these currencies are producing strong numbers versus, if we have as a low score, right, a low score for like Swiss franc, those values that are coming out, the economic data reports are coming in weaker for the Swiss franc. So right now, the currencies that are getting some strength are things like the British pound, the Canadian dollar, the New Zealand dollar, and that is pretty much it. And if we're talking about some of the weaker currencies on this list, we have a whole lot of stuff that's neutral, right? The Japanese yen, the Australian dollar, the US dollar, and then the Swiss franc actually tailing into the weak side of things. So in terms of trade setups, I'm already long the Canadian dollar versus the Swiss franc, but maybe I look to add things like the New Zealand dollar against the Swiss franc or the British pound against the Swiss franc. So that would be how I trade currencies based off of the economic data. Now, of course, I do also look at the commitment of traders data. I look at seasonality, but I don't look at these things manually. I use the algorithm that we've built here to automatically scan all that stuff. So in terms of let's just go here and we'll just take neutral readings out here. This is pretty much what I'm working with for my watch list for the week. So I'm looking for bullish setups on the NASDAQ, the Chinese stock market. I am also long the DAX. And I'll tell you why I like the DAX. If I go look at the EU economic heat map for stocks specifically, the DAX looks really attractive, right? So we have in the European Union, we'd had some better than expected PMIs, Purchasing Managers Index numbers. We also had 1.9% inflation. So the central bank there, the ECB, can continue to cut interest rates as needed, which I think could be stimulative to stocks. Also the alternative effect with the whole, U.S. and trade uncertainty, there is some demand for foreign stock markets right now that I think can continue. So let me show you a trade that I actually ended up taking inside of our VIP service on Friday. So I went long the DAX. As it pulled back, I called this out in our group, and we'll see if this trade ends up hitting. If it does, then great. If it doesn't, it's a small loss and we move on. But I've had some really good trades this year, and I do share everything that I'm taking inside of our VIP group. So let me just share a little bit of context about what that is about. So inside of our group, every trade that I'm taking, so if I'm taking the trade on the DAX, if I'm looking at the euro dollar, if I'm trading gold, if I'm trading, the Russell, every trade that I take and discuss on these videos is notified to the members of our VIP Discord. If you're not a member of the VIP Discord and would like to be, and you made it this far in the video, then I want to make sure that you are aware that we are currently not only doing our VIP sale, but is the biggest discount that we do all year long. With the VIP group, you get access to every trade that I'm taking, our chat rooms, our coaching material. We have a strategy library where we can download reports on how we trade and why we trade. All of that is currently 40% off. Now, all you have to do to take advantage of the 40% off discount is head down to the description and use the promo code that you see down there at checkout. It's YT, so YouTube, YTVIP. If you punch that in at checkout using the link in the description down below, you can get 40% off for a very limited time, and I do look forward to meeting some more of you guys. We've had a couple people join the VIP group, and it's really nice anytime we do get a new member because, a lot of people who have been in the group have been trading alongside me for years. We've had people in here for, I don't know. I mean, we've done the group since like 2018. I've had people in there since 2018 who are still in the group. So if you're looking to join a serious group, again, everything that I do, every trade that I take, and I also share my public track records for this very purpose. I sell something in the trading space. I believe it's right that if you're going to sell something in trading space, you do offer some level of transparency. So you can explore that on our website using the link in the description below. Okay, so let's keep going. So Let's talk about the dollar, right? So with a weaker dollar, you might be asking, Nick, why do you like the DAX? Well, I kind of like the DAX for a number of reasons, but one of them is because a weaker dollar does tend to favor foreign currencies and foreign stock markets. Weaker U.S. dollar can be attractive for that potential. Especially with the uncertainty surrounding the U.S. dollar at this time, the trend has been to the downside. Now, do I think that the dollar has a tremendous amount of downside from here? Well, you heard me talk about it earlier. I'm pretty neutral when it comes to the economic data at this time. And so I do think that there is, potential for dollar to continue its downward trend, but it's not something I'm betting heavy on, right? I'm not like super short the US dollar. That being said, we did trade below and close underneath this level of support around 98.2 or so. So we'll see how this thing trades going into this week. If you get some stronger close down here this week, we do have a FOMC meeting on Wednesday, which could be market moving here for the US dollar. So if you get a big slide downwards, yeah, I mean, that could kind of solidify our next wave, depending on what Jerome Powell has to say. If Jerome Powell says, hey, you know what, tariffs are progressing, and we do see the labor market starting to cool, right? We may see cuts coming. Like, he's not going to say it that way, but if he were to signal that rate cuts may be more likely to come, then yes, the dollar can continue its slide. A lot of times people forget that things can trend for a very, very long time. And so just because the dollar's been going down, is this really that far? Well, look what happened in 2022 or 2021 into 2022 when inflation was skyrocketing. The dollar index moved up 27%. So yes, the dollar's moved down a lot, but if you think it can't go lower, then be very careful, because it certainly could continue to go lower if you get something about rate cuts and things like that. So my bias when it comes to the U.S. dollar would be neutral to bearish. I would not say bullish. I would not say strongly bearish. I would just say neutral to slightly bearish. If we take a look at some individual currency pairs, let's take a look at the Euro US dollar here. So if I'm looking at the Edgefinder's top setups page, let me just see in terms of currencies for a second. I'm just going to actually, what I'll do is we built this page called the Top Setup Simple page. Just makes everything really easy to read. I know on YouTube it can sometimes be a little small on your screen, but hopefully this helps you to visualize what I'm looking at a little bit better. Let me know in the comment section if you like the Top Setup Simple page, if you'd like me to use it more in videos. But anyways, we've got pound dollar here on the list. Let's see. Do we have euro dollar? We do. Euro dollar is getting a bullish reading. So specific currencies against the US dollar I like more than others, like USD CAD, right? Euro dollar, and the British pound against the US dollar. Those are going to be three setups that we can take a look at, some bearish USD setups right now that I think would be worth watching going into this week. So if we take a look at euro, am I looking to get long the euro? Well, yes, but I would probably want to see at least a pullback into this 1.14 level for possible long setups to start building a long position. Maybe a long here, maybe a long at 111 as well. Those would be, for me, a more of a dollar cost averaging approach. If I'm going to trade currencies, that's typically how I do so. I know it's not for everybody, but some people like a tight stop loss. On currencies, I tend to do dollar cost averaging instead of, a tight stop. I have a full strategy video. If you search it up on YouTube, search up Trader Nick space dollar cost averaging Forex, and you'll probably find my video that I did recently on the subject. It's actually been a pretty popular video on my channel, so check it out if you'd like. So I do like euro, but would be waiting for some bullish setups on a bigger pullback. British pound against the US dollar, pretty clear area around this 34.40, so 1.3440 would be an area that I watch for an initial starting position on the British pound. Let's take a look at dollar CAD. So dollar CAD has been completely melting down here. I talked about this one. I think for me, if I was to get short on the dollar CAD, where I would feel most comfortable doing so, where the most clear, obvious levels that I see, potential short interest would be, let me just mark this or add this to my levels, would be these two areas that you see kind of in proximity nearby price at this time. So this would be, I say that this is still 250 pips away, but if we had a 250 pip rally in the dollar against the Canadian dollar, I think that actually could be an interesting area to start a short position on this currency pair, with eyes on at least retesting where we currently sit, but even going lower. So I do think that the dollar CAD is likely to continue its downtrend that we've seen here in recent times. Maybe a more obvious level, this level could actually be around here, right? So this is where I think price likely wants to go, at least if it's going to continue in the current trend that it's in, which is of my, my approach to currencies or to markets in general is that like the trend that it's in, I think it is most likely to continue. So if you are to see a spike higher in the dollar CAD, maybe we make a move all the way up to 1.4 or maybe 1.38 gets it. But this general area, I'd be looking for, or even 1.41. These areas would be selling opportunities, in my opinion, because again, I think that the fundamentals slightly more favor continued downside on this currency pair, at least for now, based on the way economic data is falling. So there's a couple currency setups that I'm watching. I do also want to just loop back on the indices because I talked theoretically about them, but let me just show you more practically. So I have a Russell position long that I do intend to hold on to here. I have a stop loss on this trade that has been trailed into profit. Depending on everything that goes on this weekend, like I said, it's a very scary thing happening in the Middle East. If something breaks down over there or drastically improves, this chart very well could gap higher or even gap lower, in which case I would have some slippage exposed to me. So that is possible. But when it comes to the Russell, I like the idea of holding this trade as long as we generally don't break through those lows. If we break through those lows, I'm going to take profits on the trade. And if we can rip through these highs, then I will look to take this stop loss and move it further into profit. So I do like the Russell quite a bit. This is a trade that's in the VIP group that we've done really well with. So I like the Russell. This is US 2000 on most CFD brokerages, or IWM on stock brokerages, or RTY on futures brokerages. I know all these things can be confusing depending on what you trade. If you trade Forex, futures, stocks, whatever, they're all the same thing. They just have different symbols. But basically, when we take a look at the other indices, right, S&P 500, so where I would be interested, I would probably take a stab long on the NASDAQ first and foremost if we got to pull back to this 20,800. Friend of mine, Marco, who comes on the streams pretty frequently, you can find him on Marco's Trading Journey on YouTube. He comes on the live streams pretty frequently. We've both been watching this area around this 20,800 level. I do like this for a possible long. I do think that the path of least resistance is further upside. If you're interested in individual stocks, I'll be doing a separate video on my new YouTube channel, Trader Nick Stocks. If you search that up, if you're interested in stocks and you like things like Google, Microsoft, Apple, earnings reports, price action on stocks, if that's something that you're interested in learning more about or watching along, search it up on YouTube, Trader Nick space stocks. But I would request that if you're interested in stocks, check that channel out. But if you're not really a stocks person, then you're in the right place here and no need to confuse your YouTube algorithm. But check it out if you are interested in individual stocks like NVIDIA, Tesla, etc. So I have been doing videos on that channel pretty frequently as well. But in terms of NASDAQ, that's probably the other top index that I like. If we got a bigger retracement here down to this 20,800, I'd be looking for longs with a stop loss below structure. So I do like that one quite a bit for some upside here. Let's take a look. What else? So in terms of gold, I already covered this one, but let's also talk about silver. So silver looks really strong from a price action perspective, but I think on the Edge Finder, I could be wrong, but let me just double check. I think silver is not currently getting a strong enough reading, so probably no trade for me on silver, but the technicals look really good, right? On a weekly chart, right, you have this long-term consolidation that we've broken out of. So retest into this daily chart level around this previous high here, around the 1.3450 level, does look from a technical basis like a really strong 50% retracement from this zone here. Yeah, you got like this area right here. Looks really strong for a possible buy the dip. Although, like I said, I probably would need to, or I definitely for my system, I would need a stronger reading from the Edge Finder before I can actually justify taking that trade. That's just the way that I approach things. I want to see fundamentals, sentiment, and technical analysis all kind of aligning in my favor to increase the probabilities that I'm actually going to make money on the trade. Technical charts can be very confusing, and I think that one of the pitfalls that most retail traders fall into is overvaluing technical analysis and severely undervaluing fundamental analysis. Looking at economic data, understanding what those trends are likely to be and how that's going to impact the charts for the coming days, weeks, and months is something that most traders miss. So I have invested a tremendous amount of time into building the tools that we use on my channel. The Edge Finder is a really popular product for that reason. It helps to source collects all of this data in one place and even scores it to help people to better understand the tool or to help better understand the data that's coming out on each of our markets that we're talking about here. Other things, other notable mentions, the Australian dollar against the Kiwi dollar is getting a bearish reading, which is a currency pair that I do really like trading. It's not a crowd favorite, but I like trading the Australian dollar against the Kiwi dollar because it's a very choppy currency pair, which sounds ludicrous to some, but I like choppy currency pairs because they're highly correlated in many ways, right? The Australian economy and the New Zealand economy in many ways are very similar. And so they tend to chop sideways over the long term, which I love from a dollar cost averaging approach, because let's just say I'm bullish on it and I'm buying this move. Even though, yes, that's a big move down, most of the time, the thing kind of just chops back and forth, and I can take really small entries here, here, and here, and then eventually, when the bounce back occurs, I can make money on that move. Of course, easier said than done, but you can see this chart has been very, very good for many years at being predominantly a mean reverting back and forth trading chart. So in terms of the Australian dollar against the Kiwi dollar, would need to see a rally in this chart to get some shorts added, but would be something that I'd be interested in if we can get that in the coming days or weeks. The Australian dollar against the Canadian dollar looks interesting to me. I already have a long position on the CAD against the Swiss franc, but I do like the idea of staying long the Canadian dollar here for a number of reasons. But of course, the geopolitical headlines could impact oil prices, which we'll talk about in just a second, positively, which could be strong for the Canadian dollar. So the Australian dollar against the Canadian dollar here moving lower, breaking through some key levels of resistance. This currency, in my opinion, very well could see a retest of some of those lows here in the coming months and weeks. So I'll keep an eye on this one, but would be looking for, in terms of short trades on the Australian dollar against the Canadian dollar, which would be a currency pair that I could trade on this one, would be a short position up in the 89.40s or the 90 levels. So watching this currency pair for some possible shorts in the coming days. So we'll keep an eye on that one, see if we can get a bounce back. Let's talk about oil because I just mentioned it. Oil looks really good to me. Like, it looks really, really strong. Of course, the geopolitical headlines spiked the thing, but before the geopolitical headlines, oil was kind of already grinding higher here and had a bit of a breakout before the geopolitical headlines hit over here. So where do I like oil? Well, I like oil from a technical basis, from a turnaround story. Looks like the technicals are turning bullish here, are in the process of doing so, but I still am going to stick to trying to be patient enough to wait for the pullback on this one. We did put in a big spike higher here. I'd be looking for a larger retracement down to the 61.8% retracement to see if I can get a long position. Now, I do like energy stocks as well, and on my other channel, I'll probably be talking about some of the ones that I'm watching at this time, but for me on the oil, the commodity level, right, I would be personally looking for the 61.8% retracement as a level of technical support. And I'd also be looking to keep an eye on the Edgefinder scoring for this. So if I go to my top setups page and I keep the neutral ratings in, what I'm going to do here is I'm just going to filter by category to include commodities only so we can take a look at oil. You can see it is getting a neutral reading. Retail positioning clearly seems like everybody kind of rushed to buy calls. We can see this in the put to call ratio, which is a tool that I use to gauge market sentiment. Let's take a look at our market sentiment tools, which I think we should take a look into some of these just every week. I mean, I do it all the time, but I'll do it here in just a second. If we take a look at the put to call ratio, and then specifically what I'd like to do is just filter this thing for oil to see how things are looking on US oil. Boom, there we go. You can see that in all of the craziness that we saw last week, there was a big demand for calls. Now, if you're new to my channel and you haven't heard me talk about the put to call ratio, the put to call ratio simply looks at the options market for the underlying asset. In this case, what we use for this is USO, which is an ETF that tracks oil prices. And we look at the balance of how many investors or traders are buying puts versus how many investors are buying calls. Now, when everybody is buying calls, this line moves lower. When everybody is buying puts, this line moves higher. And so the way to read this chart that you're looking at is when this chart moves very low, you can see it over on the left. We call this our extreme greed level. This is where people are very euphoric. They're greedy. They think this market's going to move higher. So when we're talking about oil right now, the volume is suggesting there's a lot of people who got really bullish on oil. Now, when it's more extreme to the other side, that's actually an opportunity, in my view, to get long on oil, right? Or to consider oil closer. I still want to look at other factors, but this is why we say in these videos that I'm interested in not just the technicals, not just the sentiment analysis, right? The crowd sentiment, not the institutions, but also the fundamentals. We want to look at all three of those things. So that's why we kind of string this together on this channel. That is the specialty of what we do here. So the put to call ratio got really high late May. So let me just show you May 29th is right here. See this? This is the day that the put to call ratio got really, really bearish. People got really bearish on oil at that moment, and that was a perfect timing. Now, I wish I had caught that trade. I do have some stocks that are long on oil right now, which have done really well, but I didn't catch the commodity side. So I am watching this. I'd like to see sentiment come back in, right? Get people scared a little bit. Price retracement, price technicals moving higher. Then maybe we get that set up on oil. So I'm going to keep an eye on it. I like it quite a bit, but I'm just not right now. The timing doesn't seem to be right for my strategy. You might have a different approach, and if you do well with it, great. But on this channel, obviously, this is my channel. I'm sharing what I'm doing in the markets. That's what I'm looking for, is retracement, sentiment to pull back, right? We want to see this thing kind of hover back in this area, and we're going to watch that close to know when the timing is more likely to be correct on oil prices. So I just want to mention this again. If you want to try out the tools that I'm using here, take your trading to the next level. So many traders are just staring at technical charts and wondering why they are running in circles. You need to have the right tools if you're going to do this stuff. And we, have painstakingly over the years built these tools that we show in this video, to help us to guide better on what we want to be watching. So I know a lot of people watch these videos and they're like, well, I'll just watch your videos and get some of this, but what if I'm not here for 3 weeks? Or, worst case scenario, what if I'm gone for good, right? Or maybe I shut down my YouTube channel someday. So get yourself the tools. Yes, you can watch some videos and you might catch a glimpse of what you're looking for, but being able to pull up these things and look at specifically what you want, when you want to look at, on what assets that you want, right? We have NASDAQ, gold, Dow Jones, put to call ratios for all these things, right? You can spend a lot of time in these tools, and most people do who get that access, really diving in and understanding this stuff better. So if you'd like some information about the Edge Finder, the link is in the description down below. You can, by the way, I mentioned earlier that 40% off discount with Gold VIP. You can also get 40% off the Edge Finder with your purchase if you pick it up. All the information is in the description down below if you want to explore our special offers that we're running right now on everything that we offer. Okay, so I mentioned I want to look at a little bit more market sentiment to wrap up here, so check this out. We did see sentiment for the first time in a while, guys, go from negative on the markets to neutral. So what I mean by that is this is the investor sentiment survey. It gets sent out once a week. We get to see what market participants are thinking about the state of the market. Are the markets bullish, or are people feeling bullish about the markets, neutral, or bearish? And people have been overwhelmingly bearish for most of this market correction. Lo and behold, it was actually a really wonderful buying opportunity that almost everybody missed. Like, look at this sentiment. Most people responding to the survey, 50+% of people said they were bearish, and another 15 to 20% of people said they were neutral. How many people missed out on the bounce back in stocks? Now, of course, this is asking people about the stock market, but it does give you a gauge of risk sentiment. How many people missed this move, right? Based on this survey, if we were to just look at the survey we just discussed, who missed this move, right? Who got caught on the wrong side of this move? Almost everybody. The minority of people caught the bounce back. Most people missed it. And that's how a lot of these things go. People get really spooked. They get scared. They read the news headlines. Oh my gosh, Trump is going to do all this. He's going to ruin the world. Guess what? It happened under Biden too. Trump's going to do this. Biden's going to do that. It's amazing how the news just does such a great job at scaring everybody out of their stocks and their positioning and getting completely on the wrong side of the market just before it reverses courses and moves higher. So sentiment here right now is much more neutral. We've gone back into slightly more bulls than bears. This is not leaning one direction or the other. It's very much neutral here. If we take a look at the put to call ratio on the S&P 500, we can just take a look at this. You can see it is slightly leaning a little bit bearish, but not quite in an extreme level either. If we take a look at our Bitcoin versus gold ratio, You can see this actually dipped back into more of a risk off environment. Remember that when this thing is moving higher, we call this more risk on. When Bitcoin is outperforming gold, and vice versa, we call it risk on when it's moving up. We call it risk off when it's moving down. It's kind of actually going sideways here recently, with gold performing really well due to the geopolitical headlines and perhaps a bit of risk off coming into this market. I love looking at this indicator on a frequent basis to get an idea of what sentiment in this market currently is looking like. Let's just see what else we can do with consumer confidence here. Just wanted to look at this. We did get our first spike up at the end of May in consumer confidence in quite some time, higher than estimates. And so we'll see if that can hold up in our next reporting at the end of June. So really interesting stuff, guys. Stay safe out there. I've shared with you most of the setups that I'm looking at in this market. If you enjoyed my video today, do me a big favor. Let me know you made it to the end of this video by commenting in the comment section down below the word end. I will try and heart your comment. I greatly appreciate everyone who watches my videos. I know you hear YouTubers say that all the time, but I do sincerely mean it. It's a dream of mine to be able to share this passion of mine with others. So thank you very much for watching my videos, and make sure to hit the thumbs up button if you haven't already. Last thing I'll say is that if you're looking for a better brokerage, check them out down below in the description. There's special sign-up perks available to you guys as subscribers that I've set up with all these different brokerages. So explore those offers using the links in the description down below this video. Thank you so much for watching. Trade safe. We'll see you next time.